Ladies and gentlemen, I think it's time to start. We would like to welcome you to the side event number 2, which is going to be about commercial banks, including Islamic banking and water-related investments, which is organized by our colleagues from the Union of Arab Banks. Really like to thank you for this, because I believe one of the conversations that we had yesterday was what will make commercial banks to be interested in investing in the water sector. And I think that's going to be a very important conversation. And the moderator for this session is our great brother here and colleague Ali Auda, who is the Director of Research Department of the Union of Arab Banks. Can we please, as you are coming in, give him a warm welcome, please? Ali, the floor is yours.
Thank you very much. Thank you. Good afternoon, ladies and gentlemen. I know how much it is difficult to bring people after lunch. However, it's time to feed our minds. Our bellies are full. So now we need to add some food to our minds. Ladies and gentlemen, I'd like firstly to thank the dear colleagues from the OECD and the Islamic Development Bank for inviting us to have this, to have an input or participation in this very important event regarding water financing in the Arab region. So this session will be dedicated for the private sector. Yesterday and this morning, we had input participation from the public sector. So it's time to listen to the private sector point of view, in particular banks. So we will hear and we will understand how banks perceive or see involvement in water finance. In this session, we have two pioneers in banking from the Arab region. Someone is asking to...
That's okay.
you want it?
Click the arrow when you want to switch.
Okay, no, I need this one.
No, it's okay.
Okay.
We have the control.
Okay, fine, thank you. So, I am honored and pleased to introduce, first of all, Dr. Adnan Ahmad Youssef. Dr. Adnan Ahmad Youssef is the President and Chairperson, President and CEO, of Limray Consultancy. He is the Union of Arab Banks board member currently, and he is the former chairman of the Union of Arab Banks. Also, he was the former president and CEO of Al Baraka Banking Group, which is the largest Islamic banking group worldwide. Also, he is the former chairman of the Association of Banks in Bahrain. In addition to many other titles, we don't have time to list them all. Welcome with us, Dr. Adnan, and thank you for being with us. Also, we have with us Dr. Dalia Abdul Qadir. Dr. Dalia Abdul Qadir is the Chief Sustainability Officer at CIB, which is a leading Egyptian bank. Also, Dr. Dalia is the board member of CIB Foundation. She's the chairperson of Sustainable Finance Committee at the Federation of Egyptian Banks. She's been leading the sustainable financing movement in our region since 2003. Dr. Dalia is the former MENA representative on the UNEP FI Banking Board, and she's currently a member of the Institute of International Finance High-Level Policy Expert Group, in addition to many other titles and many other initiatives. Also, I cannot list them all. Please welcome Dr. Adnan and Dr. Dalia for their presence with us. Before starting with Dr. Adnan and Dr. Dalia, I'd like to present in a few minutes a gift for this event, for this important event, which is this short presentation. We all know that our region faces a significant financing gap in general in terms of financing sustainable development. Some experts, some studies state that the financing gap is about $230 billion per year. So in order to help bridging this gap, this financing for development gap in our region, the Union of Arab Banks made a commitment in September 2023 in the SDG summit in New York. In that summit, in the SDG summit 2023, the Union of Arab Banks committed to encourage, to urge banks to dedicate $1 trillion of financing for the sustainable development in our region, for the 22 countries in our region. Mainly, the areas to be financed or to be focused by the $1 trillion, which is, of course, a very ambitious target. The main areas to be covered: social protection, energy, education, food systems, digital transformation, and biodiversity and nature. In order to achieve this goal, this very ambitious goal, we had several events, several activities. Among them is to conduct annual survey with banks to, first of all, assess the financing gap and to see where banks finance or where banks dedicate their financing portfolios. Of course, this initiative, this commitment, was in collaboration, partnership with the UNESCO. So the UNESCO are our partners in this very ambitious objective. So the survey, which will be sent on annual basis from now till 2030, which is the aligns with the UN 2030 agenda, will be updated according to the feedback from banks. So what we did is we prepared the survey, we prepared some questions, and we sent it to the Arab banks, to a large number of Arab banks. And we asked them, please classify your funding or your loan or lending portfolio according to these SDGs. For them, it was something new. They do finance SDG, but in their mindset, it wasn't clear that this loan belongs to this SDG or that loan serves the other SDG. So we asked them, please classify your lending portfolios dedicated to the government, to the states, because banks, Arab banks do lend governments, and the corporate loans and loans to MSMEs. Please classify them according to these SDGs, including water and sanitation. What we will do next year is we will split water and sanitation. Okay? It wasn't easy for banks to absorb this survey because it's not easy really to classify loans according to 17 SDG. Because sometimes there is some overlap because one loan could serve 2 or more SDGs. Additionally, we asked banks also, please tell us if you finance climate loans, if you have climate loans, financial inclusion, gender, and financial inclusion youth. In addition to partnerships and financial products that serve SDGs from their point of view. Now, let me give you some preliminary results about the survey. So we had 58 responses, which we consider good, given that it's new for banks to start, for Arab banks, I mean, to start classifying their loans according to the 17 Sustainable Development Goals. And this is the distribution of responses. Now, I will give you the results if banks have or do not have a loan dedicated to SDG, regardless of the amount, because the banks have different sizes. So maybe for one bank it provides $1 million, another 100 or million or 1 billion. So these figures show if they have or they do not have loans dedicated to SDG 1, 2, 3, etc. So these are the results. For example, poverty eradication and social protection, for example, 11.1% of the banks have loans to government that serve sustainable development goal 1 and so on. To highlight the results, these are some of the numbers in bold are the most important figures that can grab our attention. Now, regarding water and sanitation, which is goal number 6, which is the topic of this event, let's see what Arab banks say. Loans granted to governments that serve this goal, 7.4% of banks say yes, which is a very small number, very small percentage. But for corporate loans, more than 1/3 of banks that responded said that yes, they provide loans to corporations, to companies that serve goal number 6, also for MSMEs. So in general, let's say an acceptable percentage of Arab banks dedicate loans that serve water and sanitation. Also, you see, for example, agriculture, sustainable development goal 2, there's a considerable proportion of banks that dedicate loans that serve goal number 2 and also goal number 4 and goal number 9. Inclusion. So Arab banks do finance development. For them, they are profit driven. So they are financing to get revenues. However, the other side of the coin, these loans that are investment for banks do serve sustainable development in our region. Regarding the other points, 37% of banks, they do offer climate loans in general. For gender, the ratio male to female loans range between 1.5 to 37.7. So in some banks, the ratio of amount, of course not number, is 1.5. So there is a gap, but it's acceptable. However, there are some extreme cases where the ratio is about 690 times. So very small amount dedicated to women versus a huge amount dedicated to men. These are preliminary results. We're still in the way of obtaining more results. And hopefully, these results will highlight the sustainable financing or the financing for development in our region. This is the first time that we show these preliminary results in this event. Thank you. Now I will move to the panelists and we will have a discussion with them. Thank you for your attention. I'd like to add that this is really the first initiative of highlighting financing for development empirically in the Arab region. Thank you. Now, done with me. Now let's move to the panels and we start with Dr. Adnan. Thank you, Dr. Adnan, for being with us. Now, my first question for you, if you allow me. Based on your long experience in Islamic banking in general and mainly in Islamic banking, what are the main products and services, banking and financial products and services that help financing water sector in our region. And how do you think that these can, in cooperation with the Islamic Development Bank, help boosting financing for water sector in our region, given that we have all our countries suffer water scarcity?
بسم الله الرحمن الرحيم والصلاة والسلام على سيدنا محمد وعلى آله وصحبه أجمعين. You know that there are 4 sectors, especially in the Arab world, are controlled by the governments. And these sectors or this business is not difficult, but it is a little bit very important for the government to give it to the private sector. Electricity, water, oil, and communication. However, now we try to see a lot of government has changed their mind about allowing these sectors to be financed by the private sector or participate by the private sector. However, before we start with that, very, very, very important issue, people has to raise it to their senior people, that we have to set up the legal system. Without having the legal system in these countries for such kind of a project, it will be very difficult to get banks, commercial banks, whether traditional banks or Islamic banks, or investors from the private sectors to provide such kind of financing. Just before, when you are talking, I just remember something, and I want to share it with you as an information. The first transaction, we done it as a syndication with IDB, was 40 years ago. And we done it for Pakistan, but that was for trade. Exporting rice from Pakistan to the Arab world. The transaction was not that big, it's about $150 million. Going back to your questions, I believe that there is a lot of potential for the private sectors and for the commercial banks and for the Islamic banks to get involved in the financing of such kind of project, subject to that you have to have a very good system to protect both the investors and the lenders. And I want to share with you, there was a practice in the 80s, I done 2 deals. One was to Hungary and the other one was to Turkey. By using the World Bank. And we used to call it co-financing, whereby the World Bank will provide a tranche A, which is a longer period, and commercial banks will provide financing with a short period. When I say long period, 20, 25 years, and short period between 10 to 15 years. And it was succeeded. And there was a clause in both agreements. And I think that this is a very important issue. IDB, World Bank, has to insert it in the agreement, which they call it cross default. i.e., if the government default on the World Bank, it cross the default on the commercial transaction. And if the government default on the commercial, it trigger default on the World Bank. This gives you the assurance that the government will make sure to pay to this to both lenders, whether under the World Bank or under the IMF. I think that there was a transaction done in Africa, and I remember clearly I done 2 transactions. Hungary, 450 million, and Turkey, I think it was about $300 million. This is, I'm talking about the 80s, yani 300 million 80s. It was not a small amount, it was a very big amount. But as I say that in the beginning, legal system has to be implemented along with very, very important issues payment in foreign currencies free of any kind of restrictions. Because what we face now, Islamic countries and Arab countries, they have some kind of financial difficulties. And when people they want to, when the government want to pay, the system says that, we don't have foreign currencies. Therefore, who will be affected is the lenders. So I think that this is what I say. We have to make sure that we have a good legal system. And since I am in the IDB, I will recommend directly to the people of IDB to set up a legal committee to draft this kind of legal system in the countries. Because if you apply it in one country, you can apply it in the other countries. Thank you.
Thank you very much. So what you're highlighting is kind of risk sharing in order to minimize the risk for banks, to encourage them to involve in long-term financing or medium-term financing at least. Thank you. Dr. Dalia, your first question, please. Yesterday, you were very enthusiastic and you participated 2 or 3 times, or you had 2 or 3 interventions. Based on that, I'd like to ask you, so you mentioned yesterday the new role of commercial banks in what's called adaptation finance. Can you explain more this concept, please?
Thank you, Dr. Ali, and I wish to thank. I want to thank the organizers, and I want to thank all panelists and the audience for all the insightful remarks. And I think I was very overwhelmed yesterday and today by the comments, and it affirmed my belief that we are capable of addressing the adaptation gap, provided.
Sorry, when you say we, you mean banks?
Not we.
Okay, in general. Okay.
So far it's we.
Okay.
Right? We can address the adaptation funding gap, provided we exercise some conceptual reframing and adjustment of misperceptions, all right? But before I identify these misperceptions, let us align on what we agree on. We agree that adaptation finance is compelling, it's imperative. Why? Because climate change is worsening. And every year, the IPCC comes and informs us that we are witnessing the warmest year in a row. And that even if mitigation finance improves, the emissions are locked in. So we are bound currently in the future to face severe weather conditions, drought, food scarcity. So this is a fact. The second fact is that our governments are burdened by fiscal burdens. The Arab region is witnessing external debts that amounts to $1.4 trillion. The third is that public and development finance is not enough to fund adaptation gap. And even if it's enough, it's not flowing. Okay. Yesterday, I read the ESCO report, and it mentions that over 2 years, the Arab region got 6% of its needs from public finance and development finance. Since 2009, we've been promised $100 billion annually, and year over year, we are struggling to release this amount. So it's not working. Plus, on the other hand, the global financial system has something like $379 trillion with banks, with institutional funds, with asset managers. So the supply is there. We only need 0.25% to meet our adaptation needs. It's a fraction of 1%. So I think we have an opportunity, and we are challenged to take control of the Arab region climate narrative, and to move, and this is my argument, to move adaptation from the realm of public and development finance to private finance. This is our only way out, and let us face it. because the numbers do not serve. I mean, when we talk about development finance, it's salt and pepper. But where is the meal? The meal is private finance. So this is our mandate to shift the adaptation from development and public funding to private finance. But how we can do this? Two things. The first is we need to identify the business case of adaptation finance. A fatal misperception that we have, a stereotypical approach to adaptation finance, is that it's not profitable. It doesn't have a risk return ratio that appeals to investors, and it doesn't have constant revenue streams. That's why it deters private investors, and it is pigeonholed with public and development. And this is a misperception, because all reports released by the OECD and the World Bank, they say that the cost-benefit ratio of adaptation is 1 to 4. If you invest $1.8 trillion over a decade in adaptation, you are likely to get $7.1 trillion of combined benefits, which is environmental, economic, and social. So the business case of adaptation finance is there. What is not there is the systems, the business models that are in our systems, the accounting system, the traditional accounting system that fails to capture the environmental and social benefits and monetize it. For us, they are dubbed as externalities, land, and these are external to our system. And I think it's essential. Einstein has a very insightful saying. He says, not everything that we can count counts. And not everything we cannot count does not count. We cannot count oxygen. We cannot count water. But water is economy, it's profit, it's life, it's health, it's everything. And here we are struggling to prove the bankability of water, right? So there is a fundamental flaw in the accounting systems and our business models, and we need to monetize these externalities, and it works with banks. From my experience, it works with banks. I'll stop here. And the other requirement is innovating business models.
Thank you very much. We'll come back anyway. We'll elaborate this point later on, and how to engage banks. But let's keep it to the second question. Dr. Adnan, you're a member of the board of the Union of Arab Banks, and you know that the banking sector, the Arab banking sector, manages about $5 trillion of assets. It provided about $3 trillion of loans and holds $3+ trillion of deposits, which is something huge compared to the Arab economy, to the size of the Arab economy. However, banks are still hesitant to engage in long-term financing projects, again, mainly water, as you said, electricity, telecommunication, and so on. We do understand that there are some concerns related to money transfer from one country to the other, cross-border money transfer, maybe the instability of legislations and so on. So I'm back again to the point of legislations and regulations. How you as bankers see legislations and regulations as prerequisite for you to engage more in long-term financing, whether in water or the other. If you can give me more examples, and we can let the audience hear the real concerns and what legislations and regulations you would focus on.
You know that this is a very important issue, which is you have raised. The private sector, I'm talking about the Gulf countries first. The private sector is becoming the private sector in the Gulf countries is becoming very rich. And when you talk about the $6 or $5 trillion of balance sheets consolidated of banks, this is nothing compared to the sovereign funds, which they have a huge amount of deposits and what we call it, securities holding and bonds holdings in their books.
Investments in general.
Trillions of dollars. What we are facing is very small issues. I believe if the World Bank and IDB and one or two people who has served in the banking sector, they sit together and they draft the agenda. The agenda will be into two. First of all, we will encourage the World Bank and the IDB to put in their transactions the cross-default clauses to protect both the investors and the lenders. And two, to put structures, because when you go to private banks in the Arab or in the Gulf countries, and you ask them to lend to Cairo, to lend to Egypt, and if you tell him that 15 years or 20 years, he will withdraw. But when you tell him that no, there is a World Bank or there is IDB has been involved, and they are providing the 25 years transactions, you will be involved in the 15 years, and there will be a cross default, and we have the system to protect you. How you protect is we have to make sure that the legal system within the country can accept such kind of risk, although that many of the financing, they go along with the English law. However, the countries has also to amend their legal system. We are facing a huge amount of problems right now in the Gulf countries as Islamic banks. When we take the case to the court, the court does not apply the commercial products which we have getting involved in it, murabaha, musharaka. He said, well, it is not in our legal systems. So I have to work very hard to encourage some of the Gulf countries and in the Arab to start implementing in their legal system the Islamic products. People, they think that when I give a murabaha, I'm well protected. No, you are not well protected. Once you have problem with your borrower, legal system will not accept your transaction. From experience, this is what I'm telling you. You have to put the legal system before you start selling the transaction outside. Especially if you are talking foreign currency. If it is a local currency, for example, Egyptian want to have a water plant. If they want to have a water plant, if it is in local currency, it does not bother them. I mean, it is local currencies. But when it comes that part of it will be in foreign currency, that is the difficulties.
Please allow me to add two questions to your answer. One, what do you think about the comparison between the legislative and regulatory system in our region, in the Arab region, compared to other Islamic countries like Malaysia, Indonesia, and so on? So what do you think? Is there a gap between between our region and the other regions?
You know, every country, it did very good. And when you talk about Indonesia and Malaysia, I can tell you from my experience, if you go back 15 years, they were behind us. Okay? But they did a great job in turning it around. Okay, see now Indonesia is becoming a very important countries. Maybe within 5 years, they will be part of the industrial countries. I mean, not as a development countries, because they have done a lot of things like Turkey. Turkey, if you go to the 80s, they were in difficulties. We are in certain issues, certain things, we are better. And they are better than us in certain issues. So I think that we have to review what we have as a strength and what we have as a weakness, and try to see the other countries what they have as weakness or strength. But all of the Muslim countries, especially the countries you mentioned, no, they are ahead. They are ahead. They have a very good financial sectors. They are well managed. It is in every countries, there is a strength and there is difficulties.
Thank you. Now moving back to Dr. Dalia. Dr. Dalia, banks are profit-driven companies, but how to persuade them, how to convince them to engage more in water finance and more in sustainable finance?
Okay, I'll elaborate on that, but if you can please allow me to share one slide which emphasizes the innovation or the business model that I introduced to empower banks to prove the business case of adaptation finance and to lead the scene. But meanwhile, let me address, Dr. Ali, your comment. How can we persuade bankers or CEOs to invest in adaptation finance? And I'm glad Dr. Adnan is on board. You can challenge me if I do not pitch it well. First of all, adaptation finance is risk mitigation, because in case of water scarcity, what happens to our clients from different sectors? We're out of business. We're talking about textiles. Which sector does not need water? So our portfolio will be transformed into stranded assets. So this is risk mitigation. On the other hand, adaptation finance provides ample opportunity for revenue generation. First of all, you get into new segments, new product development, like water desalination, water treatment. They are so much in demand. So you'll find ample opportunities to revive your portfolio. I'm still waiting for the slide. It's very important that we share it. A technical issue. It's all right. So it's risk, it's revenue generation, new segments. It's something else that will be clear in the model, which is banks are very much interested in fees, not only interest. The new role of banks, proving the business case and engaging clients, is fee-driven. So banks will be getting interest rate on lending, but will also be getting fees for their advisory services to their clients, and this will be elaborated. Third, disclosures. Now we are requested by the new IFRS, International Financial Reporting Standards, and the ISSB to report on our value creation, not only on our profit. It's becoming mandatory, right? So we need to communicate to our investors, CIB, what do we do? I mean, what's our impact on the environment and the society? So that the last, not least, is the financial statements. Now with the new IFRS, ISSB, there is a shift of financial statements from just a pure focus of profit making to sustainability disclosures. And this is endorsed by our auditors, will be endorsed by our auditors and our board. So it's not just profit. So there is a shift from profit to value, and we need to be ahead of this. So this is the business case of adaptation finance. It's risk, it's revenue, it's proper disclosures and demonstration of value creation and impacting our financial statement. It's more than enough for banks to try to rewire themselves. Myself, we're experiencing this at CIB after issuing our green bonds. Now we are partnering with the Proparco AFD to prove the business case of adaptation finance with a focus on sustainable food systems, which is agriculture and water. And I hope whenever the technical glitch is addressed, to share with you the business model. Here it is. This is the business model that we introduced during COP27, which is the African COP. And we said, we need to prove the business case of adaptation finance. The vision of this model is to come up with the Brain Trust brand, which becomes a benchmark for sustainable investments worldwide, coming from the Arab and the African region. And the mandate is to revisit the role of commercial banks, to take the lead in this. And the objective is to prove the business case of adaptation, making sure that each adaptation finance, and here we talk about water for the purpose of this workshop, has constant revenue streams and a very proper risk-return ratio and no compromise, and that's the challenge. What's special about this model is three things. Banks are proactive and preemptive. right? And they go beyond compliance. Usually we wait for regulators and policymakers and say, if it's not required by policymakers, why should I invest in water? And I say, it's management, it's risk management. So here we do not, the outer circle represents all the stakeholders that are needed for each adaptation project. So it all starts by a governance mechanism, getting every stakeholder on board, from commercial banks to MDBs to blended finance. And as you see, blended finance is not in the driving seat. Commercial banks are in the driving seat, and they are proactive. The second thing is that it changes the role of banks from funding bankable projects to developing banking projects. We usually wait for projects to be bankable, and then we decide we're going to fund. And it doesn't work anymore, because proving the bankability of critical projects needs us at this stage to step in and work on the bankability by, I don't know what's wrong with the model, but anyway, by changing our business models. Third, it's about changing the role of banks to become advocates and an agent for stakeholders' engagement. And this is crucial for our role right now, whether we're working on decarbonization or mitigation. I mean, the outer circle represents all stakeholders that should be present for each adaptation project. You should get the academia, the technology, the de-risking. When we talk about de-risking, it's either sovereign, foreign exchange, or technology risk. We should get MEGA, we should get Islamic Development Bank. Everyone in this room has a role to play to prove the business case. So we all yesterday talked about collaboration, repeated synergies, and this model brings it. The internal circle talks about the steps. I would emphasize the first step is the project design. The project design is the starting point to make sure there's revenue stream. Water, as was mentioned by colleague, can be complemented by any adaptation finance can be designed to create revenue. If it's building a dam, for example, you can have a toll station. So it is the innovation in the design. And I mean, we can discuss it later if we have time. Thank you.
Thank you very much, Dr. Dalia. Actually, we're running out of time, so I will open the floor for 2 questions only, very quick questions, if there are any questions. Otherwise, we will move to the following session. Any questions from the audience? Or maybe the audience are tired? Okay. I will ask Dr. Adnan final thoughts about engagement of Islamic finance in water finance.
I believe that we need them and they need us. Islamic banks need to diversify their loan portfolio, and as well as government need new borrowers, new lenders to them. So therefore, government cannot and will not be able to support all the projects in their countries. Impossible. So they have to open it for both the private sector who want to do Islamics and the banks who want to provide Islamic. But as I say that, you have to have the legal system. I want to share with you, there is a big project for the water, which was created for a small city in Egypt, Al-Qardaqa. It was created by the private sector. And I remember, Rahmatullah alayhi, Sheikh Saleh was involved as one of the main provider of the financing for that project, water and electricity. And they were not able to finalize the deal. When he met the president, Rahmatullah alayhi, Mr. Mubarak, he asked him about the project. He said, well, you know, we have difficulties in the legal systems. And that's why I'm saying, and I will say it, that legal system has to be changed and has to go along with the requirements. Countries now cannot provide everything. Private sector has to. And this is what I believe. from my experience. Thank you.
Thank you, Dr. Adnan. Dr. Dalia, also your final thoughts?
My final thoughts is to identify and see the business case of adaptation finance, work on monetizing the returns, and get commercial banks in the Arab region. We have around, and you know better, around 400 banks in the Arab region, around 800 banks in Africa. If you start by getting these banks to establish environmental and social risk management system, the rest is history. I mean, having 1,000 to 100 banks, we can do a lot if we take the lead to change the lives of 2 billion inhabitants in Africa facing drought and starvation. This is a fact, and it's getting worse. And all of us in this room can make a big difference if we collaborate and see the power of commercial banks to assume a new role of commercializing adaptation finance, investing in water and food. Thank you.
Thank you very much. Okay, we have a question.
Oh, thank you very much for this session. Really interesting presentation, and thank you both for your insights. I was wondering in the de-risking strategy to attract private finance, private banks, private finance in general, to adaptation investment. What would be the role of insurance company, and what is the situation of the Arabic world in this context, insurance companies?
Could you repeat the last sentence? I didn't hear you.
So what would be the role of insurance, and how in the field insurance companies in Arabic world are playing actually to de-risk the investment and adaptation?
Pension company?
Insurance.
Insurance. Of course. I mean, de-risking is the function of insurance and the function of Islamic Development Bank, function of credit guarantee, the function of MEGA. So, I mean, we do have a range of entities for de-risking. And Islamic Development Bank can shoulder the sovereign risk, for example, the FX risk. So, I mean, why I came up with the brain trust? Because in conferences like this, I will have side talks with different people, and everyone will have a piece of the puzzle solution. And then I went back and I said, we can do it. I mean, if we just connect the dots, and we need an orchestrator. It's not that banks are powerful, but banks have the convening power, because with all my respect to government, they are not in touch with clients. They are not in touch with insurance and MEGA and MDBs. We have this connection, and it's very precious. So I see that we need to empower banks to, de-risking is there. I mean, the sovereign de-risking, the FX de-risking even. I mean, there are no showstoppers actually. What's stopping us is this mental block that we are in a crisis situation, that we're having foreign exchange crisis in Egypt, for example, that we're having devaluation, fiscal debts. And you know what? The only crisis is a mental crisis, that we cannot move beyond business as usual and existing systems. Crisis in Chinese means opportunity. Crisis means that the current system is not working. And what we do is that we stay within the current system and try to patch things. So our focus is on a foreign exchange, on the geopolitical insecurities, on fiscal, on the IMF, the ratings, and we do not see that we have renewables. We do not see that we have a demographic composition very rich of young people, entrepreneurs, and SMEs. We really need to conceptually reframe and see the power of our synergies. I mean, I always tell Carol from ESQA, I'm overwhelmed by the reports made by the ESQA, the OECD, the World Bank, and the success stories here and there of funding agriculture and water. And I say, so what? We're coming next year, and we'll have worse climate change, worse geopolitical, and it's all evidence. I mean, the crisis is there. I'm sorry, Dr. Ali, but I feel very much that we need to be very proactive and have like checklists, call for action, because the scale and pace of progress are lagging and lacking. And we will be there when it's too late. There is progress. Okay, now we have COPs. So I see the power of banks, and maybe you will agree with me, that's under-tapped and under-leveraged because I have been in the banking industry for the last 40 years. And I can see one bank and industry actor can drive a real economic transition. And the other power that we have in the Arab region and Africa, and I think we have to get Africa in the narrative, is the young people. 60% of our population is young, and that's a lot. And that's an opportunity. But we need to empower ourselves, and we need to have belief in the financial system in the Arab world, because I think we have a very clean slate. We did not cause the financial crisis. We did not cause for the climate crisis. We did not fund our bankroll polluting it. So we have a clean slate. We have fresh systems, even if they are lagging behind the West. That's a blessing in disguise. So bear with me, Dr. Ali. I'm sorry.
Thank you very much. Thank you for this beautiful intervention. Thank you very much. Thank you, dear audience. And I think we have to move to the following session. Thank you very much.